And for more on this, we're being joined live by Mr. Madan Sabnavis. He's a chief economist at Bank of Baroda. Thank you so much, sir, for joining us on the broadcast.
Thank you.
Mr. Sabnavis, from what we understand, there is limited headspace when it comes to major reforms in terms of the tax cut that we can expect. What do you think the middle class can expect from this budget? What's your take on it?
So I agree that a lot of reforms on the taxation side, both direct taxes, that is through income tax, as well as GST, were implemented last year, and we will have to wait for time for the full effect to take place. We already saw something happening in Q3, and we'll also see that happening in the first quarter of this calendar year, and will probably carry on. So I think there's limited space in terms of income tax cuts, which we will be looking for. But however, I think on the savings side, I think an issue which has come up of late has been that bank deposits are something which have been affected on account of funds moving to the capital markets. And I think one of the demands which we as bankers have had is to give some kind of tax concessions to interest which is earned on deposits, because deposits play a very critical role, even from the point of view of the government. Besides supporting the government borrowing program, there's a lot of lending which is done to critical sectors, which we call priority sector. So I think this is something which probably the middle class can be looking forward to, because a large amount of our savings do go into bank deposits, and currently it's taxed at our income tax slab rate. So that is what we can be expecting. And the other thing is, in terms of expenditures, I think the government will be looking at certain specific sectors which have come under pressure on account of the external environment, on account of tariffs, that is basically the MSME space, and exporters. So I think this is where I think there could be a bit of reallocation of expenditures towards these particular sectors. And that is how I would be looking at the budget in terms of content, in terms of policies, in terms of reforms. And the last issue, of course, will be that something which the government has also been speaking of, rare earths. How do we actually invest more there? So there could be some kind of an impetus given by the government in terms of allocations for this particular segment, because that is something which is going to affect our future trade prospects too.
Mr. Sabnavis, pardon me. I wanted to understand, when it comes to PSU banks, they would perhaps be looking at, they would be viewing the budget very closely. There is a lot of chatter of the government in proposing the banking governance bill to make PSU banks more competitive and perhaps raising the FDI limit from the current 20%. Do you foresee anything in that respect?
No, I think if the government is taking a decision on this particular issue, I think we could be expecting some kind of announcements in terms of the FDI limits. So I think the public sector banks would definitely be looking forward to what the budget would have to offer on this particular front, because, as you mentioned, there's been quite a bit of talk about more FDI coming in. In fact, the chief economic advisor in the economic survey had also spoken more of the central public sector enterprises, saying that the limit of the government should be probably reduced so that you're able to make them more competitive. So this will be, of course, a kind of an issue which we would be looking closely.
Right, Mr. Sabnavis, the trade tax sector seems to be spending more to promote growth, and we also see we're seeking this double engine of consumption and investment. How do you think the budget is going to address these concerns going forward?
So as I mentioned earlier, there could be limited scope as far as consumption is concerned, because I think cutting tax rates further is, of course, possible, but it'll have to be more at the higher income levels rather than at the lower income levels, because today, the way in which it has been structured, up to 12 lakhs, you could probably not be paying any tax. So that is actually at people at the lower echelon. So if you're talking of higher levels, yes, there is scope, but that's a tough call which the government will have to take. Now, in terms of investment, I think the government's capital expenditure, the capex, which was around 11 lakh crores projected last year, we could probably be looking at 5 to 10% increase, being targeted more towards defense, roads and railways, because it is always felt that when the private sector investment is not really up to it, the central government has something which has been kept this engine running. And we do expect a crowding in of private expenditure. Now, the question which is often asked is that has this crowding in not taken place in the past? Why should it happen now? I think the answer here is that we've already seen private sector investment pick up, especially in the capital goods segment. So I think anything related to infrastructure, we have seen fresh investment announcements being made by companies. It's been more on the consumer goods side. And here we believe that the tax benefits which were given last year, both GST as well as the income tax benefits, is something which has already started spurring consumption. And as capacity utilization rates improve, we could be seeing fresh investment coming even on the consumer goods side. So to that extent, in 26, 27, we could be expecting private sector investment to improve gradually, but probably in a more broad-based manner.
You mentioned income tax benefits. Mr. Sabnavis, stay with me. Let me cut across to Mr. Bhutani, who's here with us in the studio. Tax is very much your subject, sir. Anything that you'd like to add to what Mr. Sabnavis meant?
No, so I think I largely agree with what Madan mentioned about that you already have seen an uptick in demand because of the dual income tax concessions and the GST concession. I think the focus in this year's budget is likely to be deeper administrative reforms and addressing the cobwebs which are there in the 2025 Act rather than any major changes. Having said that, I also anticipate that there are certain sectors which from a allocation standpoint are going to receive more attention. Data center and artificial intelligence, we saw how the IT minister defended India's position in the recent Davos event. I see that the data center and artificial intelligence led initiatives could see some funding from the government. Similarly, the private players, the large Indian players, as well as the multinational players are expecting clarity on some of the vexed issues in the Income Tax Act. For example, taxation of non-residents who are dealing with data centers. The arm's length consideration that should be earned by the data center in India in a related party situation. So there are many aspects which are on the wish list of the industry, and I anticipate that the government will be clarifying that as a part of the amendments that it will move to the Finance Bill 2026.
Right, Mr. Bhutani, and you mentioned how some sectors are going to be getting increased allocation, and AI, data infrastructure, and also electric vehicles. And of course, these will be the dominant headliners. But we also have with us Mr. Sabnavis. I would also like to get your take on which sectors do you think are going to see a targeted focus in this budget?
So against the background of the tariff issue which we have had and the sectors which have been affected, I would be expecting ready-made garments, chemicals, leather products, gems and jewelry, auto components. I think these are the sectors which have been affected on account of the higher tariffs which have been imposed by the US. And this is where I think the government could actually step in and provide support by providing some kind of a PLI like scheme, though instead of a productivity link, it will be export linked kind of a scheme, incentive scheme, where based on the past performance of these units in these particular segments, there could be a kind of a subsidy given by the government so that they would be able to survive and probably compete in the international market. So to be primarily in these particular areas, and that's what Mukesh has been talking about. Yes, I think when you're talking of AI, if you're talking of data centers, I think that is something which the government has been talking of. And we've also had special concentration in the economic survey on these particular segments. So I think that would be another thing which would be to focus as far as the government is concerned. That's I'm talking beyond agriculture, but agriculture would continue to be one of the prime focus areas of the budget.
And just taking that a little forward, Mr. Sabnavis, boosting domestic manufacturing to essentially reduce import dependency in strategic areas, what Diksha also mentioned. The key specific points there on looking at it more, with a holistic view. To boost domestic manufacturing, how much of a thrust do you see or foresee in this upcoming budget on this specific area?
See, for boosting manufacturing, I do not expect anything on the corporate tax rate as such. So that is what we're looking at in terms of lowering corporate tax so that you're able to invest more. I think that was done in 2019, but we haven't really seen that take off in a big way in terms of the overall investment rate in the country, which appears to be fairly concentrated in this region of around 29 to 30%. We're not really going beyond that. So it'll have to be specifically targeted towards specific sectors which are high on the priority of the government. Now, of course, if we're saying which are the sectors, I think if we look beyond the infrastructure-based industries, which get a direct thrust on account of the government's capital expenditure program, they would be essentially the ones which I had spoken of earlier. That is, one would be in those which have been affected by tariffs, as well as the new emerging sectors like the ones in the IT space when you're talking of things like data centers, rare earths. I think these are the things which the government would be looking at. But again, we should just remember that the total amount of allocation for these particular segments cannot really expect to be that large. it's going to be a minimal kind of thing. There could be something like 5,000, 10,000 crores, which have been set when you sum up all these sectors. So it cannot be a big bang kind of thing of, say, 50,000, 60,000 crores, which we had, say, for example, the PM Kisan scheme, which was launched several years back. It's not going to be of that type. It'll be specifically targeting the sectors, probably more in the MSME space, because we're talking of the medium and larger companies. I think they're the ones who probably have the wherewithal to compete in the international markets as well as domestic markets, because they have the wherewithal for it in terms of their own resources.
Mr. Bhutani, yeah,
I
please
just
go
wanted
ahead.
to make one mention of the data center because this kept on coming up repeatedly in the economic survey as well. So there's a very interesting paragraph in the economic survey devoted what they call it as data center, AI and compute. And there are economic reasons for that. So today, if you look at the global concentration of data centers, 70% of data centers are located in developed countries. Besides the cost arbitrage, you also have the arbitrage India offers. So there is focus already in India for that reason. Within the data center, there are constraints on how much the AI compute infrastructure can give in these advanced countries, particularly when it comes to graphics processing. So an agent-based model is something that India is looking at it, by which accessing graphics processing and high density compute infrastructure will be the priority. And there are various kinds of scenario analysis that MeitY, the Ministry of Electronics, has done. Alongside the data center, which consumes a lot of energy, there is opportunity for Energy India to enhance its energy generation. There are all kinds of figures being talked about that if these data centers become reality in India, what kind of additional capacity will have. And all of this new energy is going to go into the non-conventional forms of energy, not your traditional gas-based or coal-based. So I think AI infrastructure as a strategic national capability has been identified in the survey very clearly, including mention of capacities as to how much would this result into. So I see a strategic focus on this segment wherein you could actually have government ensuring that there is some form of a loose public-private partnership as well. So watch out for developments in this area in the budget statement.
That's very interesting, Mr. Bhutani. And you very rightly pointed out how important this economic survey also was in highlighting what all the government has achieved in the past year. A report card of sorts, but also the blueprint for the year ahead. And this is going to determine how India earns, spends, but also prioritizes in the coming year. I want to go back to Mr. Sabnavis here, and I want to understand that how 2025 was a rather disruptive year. Do you think that 2026 union budget is going to build on that momentum, or can we see some course correction here? What's your take?
No, in fact, we did believe when the tariff issue came up that overall growth in the economy will be retarded to a certain extent. We all had our calculations. I think all economists had their own views on how the economy would be affected. But if we actually look back over what's happened over the last 9 months, I think the economy has done creditably. And today, when we're all confidently talking of growth of around 7.4% for 25-26, which is going to be followed by a growth rate above 7% even in 26-27. It just shows the resilience of the economy, the way in which even our exporters have probably adapted to the new environment. Because even when we look at item-wise how our exports have really behaved in the first 9 months of the year, it's fairly positive. There was a bit of front loading, of course, which took place, but we've also seen that they've been looking at new markets. There has been a bit of rerouting which has taken place. So as a stopgap measure, I think these things have worked fairly well, which gives us confidence that with the new trade agreements which we have signed with the European Union, Britain some time back, I think these are things which would actually work in the next couple of years. And the kind of a competitive advantage which we wanted to have when it comes to dealing with other countries is something which can be restored and something which we can really build on. And don't forget the fact, something which also the economic survey has highlighted, that India being a domestic-oriented economy has its core strengths within the economy. And this is where I think the budget has also provided like incentives last year for consumption, which will probably be followed by something on the investment front, the government spending on capital expenditure. So I think all these building blocks which work done by the government in the past are something which we will see fructifying in a greater manner in the years to come, especially also in 26, 27, which will actually make us confident that we are in the takeoff stage of 7% growth. That's what even the economic survey is talking of, a medium-term potential being 7% rather than 6.5%, which was highlighted last year in the survey.
But Mr. Sabnavisan, sitting in an all-male panel, I'm also curious to know what can women expect from Union Budget 2026. We've seen a sharp uptick in women-led, small women-led MSMEs, and we've also seen the kind of challenges which are still persistent, be in terms of credit or market access. How do you think the budget is going to address that, and what should the women of India be looking out for today?
See, typically, if you're looking at the union budget, we don't have women-specific programs which are announced. It should be seen at a broader level of saying that when we are really talking in terms of anything to do with MSMEs, we should realize that we have a very good number of MSMEs which are actually being driven by women entrepreneurship. So this is where we could be seeing the incentives or the whatever benefits are being provided by the government going towards this particular segment. But typically, if you're looking at things like what various state governments have been announcing time and again about passing cash transfers for women, that's not something which the center normally gets into. So we'll have to look at more in terms of the indirect way, broader way in which the government is targeting certain segments, especially the MSMEs, which will have the trickle-down effect even to women.
Thanks so much, Mr. Sabnavis, for joining us here on the broadcast. Just very quickly before we wrap up, a quick update for all our viewers. The Union Cabinet has approved the Union Budget 2026-2027. That's the latest we have for you at this hour. We are going to be slipping into a very short break. Again, also a thank you to Mr. Bhutani for joining us here in the studios. You'll be here with us a little later as well. And we will be bringing you all the details as we're minutes away from the Union Budget being spoken out by the Finance Minister. Stay with us.